In this video, I'm going to talk about the last trade I did for the week, which was Friday, the 12th of July. Now, I did say on my Twitter profile that I'm expecting a pullback into 2395 or lower. Okay, so that's what I was expecting. And I mentioned that we're looking for these highs, okay, the high of the week. Now, to get that, I've mentioned that, look, we need to get a pullback into 2395 or lower. Now, let's talk about why I was expecting a pullback to 2395 or lower. So that's the pullback we got, okay, right there. This is the Friday news that we had, okay, 12th of July. Now, the pullback to that level was based on the 4-hourly chart. Okay, so if we look at the 4-hourly chart, we can see that this was the high. Before that, we had to move down, then we had to move up, okay? And so we have this massive inefficiency, and at a minimum, we need to come back to this level, which is what we did on that Friday, down to that level. And the low there is 2391. Okay, so if I put a line there, we come right back down into that level. So that's a pretty easy analysis there on where we would expect the market to pull back into. Now, I said 2395, okay, because anywhere within kind of that zone, I thought maybe we'll not close that gap entirely, but it did, which is fine, because the lower it goes, the more profit on any long trade from that level. Okay, so that's where the 2395 came from, basically with an expectation that we've got this move up, down, right, so we have this move up, down, then up, and then we have this large candle, which is an inefficiency that we need to come back down into this level to rebalance, right? Now, my philosophy is if I'm bullish, I'm going to be buying all pullbacks, okay? So when we've taken out this low of the week, I bought the pullback there. We've had another pullback here, okay? Into this order box, I bought the pullback there. So that's my philosophy. Now we've had another pullback here. I've gone long. Now, to me, again, this is an easy trade. If I pull up the 15-minute chart, okay, I purchased on this way down when we started to get a move up. I already had that level marked on my chart. That's fine if you don't really, if you're not confident, if you're not confident in buying as it's going down, or even if it's coming up, you think it might still go down. There's actually a really easy way to determine whether we have turned bullish or not on this move down. For me, this was quite an easy trade, and I'll tell you why. So let's bring up this trade on the Twitter. So this was this trade here, okay? So I've bought this at 2395. So as it's come down to 2392, I've seen that, and I've seen on a 1-minute chart bullish momentum, and I've entered at 2395, somewhere around here, okay? Not just because we've turned around and bullish on a lower time frame, but because I'm expecting the market to come back down into that zone. So I've expected a high time frame key support level. The market moves down into that at the right time. This is New York at the news time, okay? I'm going to be buying all pullbacks anyway because I'm bullish overall. So everything meets my profile, okay, what I'm looking for in the trade. Now my target, even though I'm expecting this high of the week to be taken, I don't have to target that, okay? I want the easy exit. And the easy exit are these equal highs up here that I can see that I've marked on my chart here. They're the equal high. That's my target, 2411, which is where I have exited. And that's a nice profit, okay? I've always mentioned as I've traded and I've posted on my Twitter profile, I don't always exit at the best target. That might be up here. Okay, that might be here. That might be, that's not a bad target. That is the high of Asia. We got that, okay? So, you know, there are plenty of targets to choose from, but I was trying to go for the easy one. This is the easy one because that's equal highs there. And there's plenty of pips, plenty of movement for me to still get a nice profit in that move up. Let's talk about why I feel this is an easy entry. This down candle is your order block, okay? So this down candle takes out all this liquidity, especially this one here. This is important, okay? These are equal lows, right? So they're equal lows. That's important. Takes liquidity and comes down to a very key level to rebalance the market, okay? So that's your order block. As soon as we trade above there, like we do here at 9 a.m., we trade above there, that validates that as an order block. Any push down, you get a potential entry, okay? The best time to trade gold is 9:30 a.m. New York time, okay? This here is your 9:30 candle, and look what it does. It comes into this fair value gap. That is a beautiful entry, okay? Let me show you something. If you don't want to buy there, you think it's going to continue going down, well, here's a great entry. Wait for the close of that 9:30 candle and see this wick. Every candle will typically have a wick. Put a little box, mark out the wick, okay, and mark the midpoint. So in TradingView, when you do a box, you can mark the midpoint, okay? And the next candle, which will be the 9:45 a.m., see it opens there, wait for it to come down into this wick, and so long as it doesn't trade below that midpoint, that's a nice entry, okay? Your stop will be at the low of that 9:30 a.m. New York time candle, okay? So very nice tight stop loss, okay? Now, that's why I say this is a very easy entry. You got the order block, you got an order block validated above, when it trades above that down candle, you get any push down into that order block is buy, in my perspective, okay? We will expect price to now start trading higher, okay? We have a shift in market sentiment. We have a shift in the direction of the market from down to up. All the way we've been going down, okay? This is where that shift occurs, a change in the shift of the delivery of price, right? So this is what I simply call the change in state of delivery, okay? Now, let's not complicate it. Change in the state of delivery is simply engulfment candle. That's all we're talking about, okay? With a down candle, fully engulfed. Now, any movement back into that is a opportunity for price to go higher, okay? But we have multiple things here. We've got a zone that the market's come into, okay, which is why I've already bought. As soon as we had a turnaround at 2395, I've already gone long, okay? We also have a market structure shift, okay? You've got a low, a high, a lower low, and then a higher high. So now we have a change in market structure. So the price should now hold within these 3 up candles. You can see the bodies of these candles remain within these 3 up candles. That's known as the bullish breaker. Okay, so a low, a high, a lower low, and a higher high. Therefore, we have a change in market structure at the right time after hitting a key high time frame support zone, after getting these engulfments. Okay, all these things are important. Having a fair value gap here, all those things combined make this a great level. That's why I say this is a very, very easy entry. Okay, now let's talk about targets. Number one, you can target the high of Asia. That there is a high of Asia, okay, which was a beautiful target. That in itself, let's say you entered here after the 9:30 a.m. close, you've come down, watch this come down into this wick above, staying above the midpoint, and you're watching it go back up. So let's say you bought, or we're expecting for price to now reprice higher. That there is over 120 pips. Beautiful, okay, absolutely beautiful. Now let me show you something else. You can kind of get a mathematical target to see if that's where the price is going to be headed. That gives you some additional confluence. I'm going to take this down candle as my range, and I'm going to project it up the same amount higher. The way we do that is we simply grab the measurement of this using a fib tool, and that is the exact movement down, projected up, and we get this target 2415. So that could be your target. So there's alignment there. There's a confluence of a mathematical target with the high of Asia. So anywhere in that zone is a great target. Okay, I simply targeted this level. I just looked at where do I have equal highs. They were the equal highs, 2411 right there, and that's where I took my exit. Okay, 2411 right there. Now I bought a bit lower, 2396, because as the market turned around from my key level, I was just simply looking for bullish momentum from my level, and as I got to that 2395 level on a shorter time frame, I went long, and my target was above this equal high. So for me, as I've explained, this is a very, very easy trade. Okay, no need to guess where we're going. Wait for confirmation. So many things have confirmed this entry. The easy spot is this down candle. Once you trade above it, you now know you're bullish. Any movement down into that down candle is an opportunity for the market to reprice higher. I always wait for 3:30. That's a very, very key time. Well, I shouldn't say I always wait. When I know and I'm very confident, I'll enter early, but the best time to trade gold is 9:30. Look at that 9:30 candle. It'll always be a level where price will reprice higher if it's at the lows, right? We're at the lows here, okay, at a support zone, or reprice lower if we are high at a key resistance zone, okay? So in this case, we are at the lows and a key support zone after getting this order block being validated, getting pushing down into the order block, into the fair value gap. That's a support zone, okay? If you're not confident into looking at that level for entry, wait for that to close. There'll be a wick. Wait for the next candle to come into that wick and make sure it doesn't trade below the midpoint of that wick. It stops under the 9:30 candle. Then you've got to work out your targets, okay? If you're confused about my target, this is simply a measurement. We can do this manually as well. Let's just draw a box, okay? Let's draw a box from the high and the low of that candle. There it is there, okay? I'm just going to copy that, clone it, okay? And I'm going to move this up the exact same amount from where its high is, right there. Okay, so that's all I've done, taken that range, projected it higher, and you can see that's the target. Okay, that's all that fib does. Okay, you take the low and the high, and the fib gives you that exact amount. Okay, so you can do it manually as well. So I hope this was useful. Go back, rewind, try and do this on your own chart. Look for these easy entries. Okay, I want to talk with you in a future video.